My name is Chris Doornbos. I'm the CEO of E3 Lithium. We are a diversified lithium development company located in Alberta in Canada. We bring a significant resource and a direct extraction ion exchange technology, enabling us to produce from what we believe to be one of the biggest up-and-coming jurisdictions for lithium globally.
Chris, good to see you. It's been a while, February, in fact, but you've been busy. Very busy. A few things I want to catch up on you with, because obviously lithium prices, continue to rise and surprise the markets. Equities not doing so well. I'd say that you're in the moving sideways camp, which is probably a win in this market. But some of the big things that happened since we last spoke. For instance, the Imperial oil deal. Why did you do it, and what exactly are you trying to achieve with that?
Yeah, I mean, one of the benefits to this particular company, and one of the only companies, in fact, in this area, the only company that we could go to get this, is that they own freehold land. And in the States, this is a much bigger thing. Freehold land is much more common. In Canada, it's not as common, but there is some in our Clearwater project area. And we approached Imperial almost 3 years ago now to discuss getting access to this freehold land. It's not necessary, but we wanted to make sure we secured that land position. That evolved over time to become what we ended up announcing, which was that it did include an option on some of that freehold land, which is really important for us because it consolidates a land position in our Clearwater area. So we did get that in the end, but one of the evolutions of the conversation was, how can they help us? And so they ended up on the register. They're now a 5%-ish shareholder in E3. And they support the company in our development. And the reason why this is so beneficial for us is that Imperial Oil, which is a 70% subsidiary, 70% owned by ExxonMobil, they discovered this aquifer in the 40s. And so they produced it. In our area, they started producing it in the 60s for oil. They stepped out of it in the 90s because it was at the end of its economic life for oil. And now you're seeing them come back into this historic aquifer for Alberta for lithium. And really, it's pretty significant because it did that discovery. It's called Leduc number 1. That well, and the derrick is still in the town of Leduc. Everything is named Leduc up there because it's so significant to Alberta because it started the oil rush. It brought the oil industry to Alberta and created what it is today, which is a very vibrant industry. The benefit of this aquifer, though, is that the oil has been produced out of it. So we have lithium rich brine, which is pretty much all that's left. And so now we're transitioning that asset into a lithium producer, which is very exciting, obviously.
Yeah. So that's good for you. You can secured the land in a sense. You've got somewhat $45 billion Canadian dollar investor, one could argue loosely. But what are they going to do for you? Is there anything that they can do for you to kind of help you other than just be a 5%-ish shareholder?
Yeah, they do help us on a regular basis. They have a lot of history, and it's focused mainly around the production. So the reservoir subsurface production of fluids from this aquifer. They have a lot of history, a lot of data, a lot of expertise. So they are bringing that to the table for sure. And that was one of the commitments they made to us, is to support the development. And really for a company like this, you have to imagine that, they don't make big moves quickly. So, this is a really good for them way to get an understanding of this. So that's what they're getting out of it. They get the understanding of how lithium will operate in this aquifer. And from that perspective, it allows them to make a more informed decision. So we spend time with them, giving them a bit of information, but they're also obviously assisting us in terms of developing what we call our aquifer management plan for the development of this resource.
Is there any sort of aspect of shared infrastructure, shared resources, whether it be people, equipment, etc., or is it just these purely standalone agreements? You do what you do, and they'll do what they do in terms of operations.
It's loose right now. There's no commitment on either side. But they do have a lot of infrastructure in Alberta. They're not producing out of this particular aquifer anymore, but they got surface infrastructure in terms of gas plants, treatment plants that could be utilized. Again, no hard commitments on any of that, but it is something that we talk about. And in terms of just understanding, could it work? What facilities are there? They're definitely providing that assistance and that information to us.
Right. Okay. And what we're seeing elsewhere in the world with oil companies is they're looking at their own portfolios and adding to them in terms of battery metals. Broadly, because they want to have a slightly different look and feel. There's a lot of negative campaigning by minority groups, stop fossil fuel campaigns. What does this do for them? And in that same context, the problem that they're trying to solve, or potentially trying to solve in terms of greening up their portfolio, are there any obligations on your part about the way that you go about doing your business in terms of its ability to potentially either enhance or damage their brand?
No, I mean, in that sense, we are separate. We're two separate companies, and they are a shareholder, but that's as far as it went in that regard. So, I think that there is obviously, and even the CEO of Exxon was that same couple of days that we announced this deal. He was recorded talking about the transition of Exxon and the loss of revenue from transportation fuels as the EVs take hold. So, there is a movement within that company, and that's publicly obvious with the information they're putting out to work on this diversification. And so, it's a small investment, but none of these relationships start in a big way generally with these big companies, and they're looking from a holistic perspective from what we're seeing. So we're excited to have them along, and they've already been a pretty big beneficial help to the development of some of the aspects that we've talked about, including that act.
Right. Okay. No, I appreciate that. And look, I know it's slightly old news in the sense that this was announced back in July, but I haven't seen you since February. So I wanted to try and understand how you can utilize that and what the potential future benefits could be. The other thing that you've done is triple the size of the Inferred resource, which is pretty punchy. That was good news.
Yeah, that work came out of something that we started a little over a year ago to get our measured and indicated upgrade. So as you transition all of these resources in the mineral space, you produce an inferred resource, and then you do a bunch more information gathering. You increase the confidence, and you upgrade that to measured indicated, and that enables you to book a reserve under proven probable. In that work, what we realized is that what we did is we gained a lot greater understanding of the aquifer. And so with that, there was some realization of some things that we could do to improve the resource estimate. We had more data, so we expanded the areal extent. We changed some of the ways that the previous QP our new QP changed some of the ways the previous QP was looking at it. And from that perspective, we now have this Bashaw district, and it pretty much spans from here in Calgary all the way almost to Edmonton. It's a 160 kilometer long aquifer. And the aquifer is well understood. It's been drilled over 4,000 times from oil and gas exploration. So there's lots of geologic data. And that's what our team was doing. Because in Alberta, after a year, that data becomes publicly available from the government by law. So we then have the opportunity to go after all of that data, analyze it. And that's what we've been doing. So we've taken all this publicly available data, we've interpreted it, done the geologic work, then we did the reservoir work, and that has increased our understanding, and that led to that increase of resource. The next step for us, which is coming fairly soon, is the 43-101 for the M&I. And the key pieces that we were missing from that were sampling from the area that we actually plan to produce from. So when you look at the perspective, a lot of the data we had was from where the oil and gas was produced historically, but that's not where we want to produce from in our commercial environment. We want to be in what we call the platform or the center of the aquifer. And because the oil section was very, very small strip along the top edge, what we call the trap, but the brine exists across the entire aquifer, which is 45 kilometers wide. So we drilled 2 holes, and we've acquired a third hole that sampled areas that had never been sampled. And those results are coming pretty imminently in terms of the grade of lithium. I mean, we're very excited about that. And so when you look at that, that enabled us to see we have now a full vertical profile of lithium grade. We have it across a much broader area. And then we conducted a production test. We actually put that announcement out today, talking about the results of that production test, confirming what we expected to see in terms of the ability to produce the fluids. And those are the two pieces we needed to move this confidence from Inferred to M&I. So now that work is going on with the qualified person, the QP, at our consultant firm, taking that data, working with us, and completing that upgrade resource. So lots of work happening there.
Okay, that's interesting, because that's where I wanted to go with you next, because I've seen, read up on this obviously before we spoke. There's lots of sort of small bits and pieces moving around, like the acquisition of the Clearwater royalty, and the technical report on Bashor District, and and sort of. It's sort of like housekeeping in a way. I wanted to understand what the big moves needed to be, because obviously the tripling of the inferred resource number, fantastic. But if I refer you back to your own PowerPoint, where you talk about the PEA, it's and you even, I mean, it's refreshingly honest. There's no certainty of the Clearwater project outlined by the PEA will be realised, right? You're saying it's just not enough right now. The certainty levels are low. So what you're talking about doing is moving the project along meaningfully with this 43101 and up into the M&I. What more do you feel you're going to need to do to give that kind of certainty back to the market? Equity markets are tough at the moment, but you're going to have to say, this is a project which will get into economic production at some point in the future. We have advanced this meaningfully. When we spoke last, I think one of the big issues was around scale. And you made an announcement around that, being able to produce at scale. So why did you feel the need to do that?
Yeah, I think when you talk about increasing the path that a company like us is on to get to a commercial production, it really is just simply checking off the path to reducing the risk. Fundamentally. So when you go from an inferred to measured indicated, you've reduced the risk because you have more confidence in your data because you've done more work on it. The same thing when you produce a pre-feasibility study from a PEA, right? You now have booked a reserve. You've taken a design that was done desktop. You've done a lot more testing. You've done a lot more design work. Now I have an engineered design that is, where much more detailed, enables you to actually cost that much more accurately. So the cost estimate in a PEA is plus minus 50%. The cost estimate in a pre-feasibility study is 20 to 25%. So it's just about increasing information, increasing understanding, confidence, and decreasing risk. And that is applied to the direct extraction technology that we're developing. So what is proprietary to E3 in our direct extraction is the material that takes the lithium out of the brine. We sometimes refer to it as a sorbent. It's an ion exchange material that we have developed. And if we look back to June 2021, we announced that we have completed the research and development on this material. And from that point in time, we started working on two important things. One is how we scale that production of that material so we can produce it in a commercial way. We can have enough of it to run a commercial plant. And the other is that we have to develop a process by which we interact the water and the material. And in the world of process design, in the ion exchange world, which is what this is, that's called solid liquid separation. And so you have to have a process that you mix the brine with your solid, which is the sorbent, and then you strip it out again from the brine, and then you mix it with your desorbent fluid to get the lithium off, liberate the lithium, and we make a lithium sulfate. And then you want to cycle back with brine again. So you're basically always mixing with water and then trying to get the water out of the material, and then mixing with water and trying to get the water out of the material. And that process you want to do at large scale. So the two pieces of this obviously need to get to the point where you can design and build something that operates at a producible scale that makes an economic project. We're aiming in the PA, we outlined 20,000 tons, which is really just phase one. It's just the start of what we can do. But the first project's always the hardest. So that's what, you do that one, you spend the time getting the first one right, and then you can expand, right? So when we put the announcement out about the scale up of the sorbent, what we're talking about there is we had spent the past year developing a process with a technology vendor. So someone who just makes equipment. That's all they do. They just manufacture equipment. And we worked with them to find a way to manufacture our material with their equipment that would be commercially sized. So the rate that we can now manufacture this material is about 1 ton an hour. And that's important for us because that is commercial. So we will manufacture this material with this technology, this equipment vendor, for the pilot, we're talking about 750 kilograms of the material that we're going to need for the pilot. So we will manufacture with them. And then when we go to a commercial plant, part of the design will be this company designing this equipment so that we can produce this material on site as we need it for ourselves. So in that sense, we've checked the commercialability box for the manufacture of the sorbent. So the last piece that we have to scale is the process, the solid liquid separation.
Right, but you're talking about commercial in the sense of the volume that you're going to be able to produce that. When do you kind of move towards trying to understand the economic component to this?
You do that from our perspective, and the way that we look at economics is we do it in lockstep. Every time we make an advancement or we look at a different type of technology or a different process, we're assessing it from an economic standpoint to make sure that we're not missing something. So as we develop all of these pieces that get put into a process flow sheet, which is, generally you refer to a process flow sheet as something that is the entire pieces of equipment stacked together that go from a lithium molecule in a brine in an aquifer to a lithium molecule in a hydroxide at battery grade, right? And so each of those pieces that need to be put together, right, in that process flow sheet, we evaluate every single one of them and the economics that it's going to cost us as the information comes in. And at the end of the day, when we produce the pre-feasibility study, which we're aiming to have out in 12 months, plus or minus, right, that is the accumulation of all of those pieces and then testing those in a line to make sure that you can take it from one to the next to the next. And then you're producing a battery grade product. You're applying a price to that product, which now is spot pricing at $75,000 a ton from what our PEA aligned at $14,000 a ton. So the value of the product has, as you mentioned earlier, has, gone up quite significantly. So anyway, so that's sort of the fundamentals that we're working on right now. Every time we work on something and we nail down that piece of the process, it adds to the confidence, it adds to the pre-feasibility study, and then we produce the report once it's all together.
So, right, given the environment that we've all been working in and living through, rising costs, etc., across the board, have you had to adjust, or have you tried to adjust your own technology? I reduce the amount of moving parts, as it were. Can you keep the cost down? Because your absorbent technology, your ion exchange technology, is just part of the solution. All of these outside factors, driving your costs up must be a concern. So, have you been able to do anything about that?
Yeah, I think one of the ways that we're looking at this is, manufacturing it ourselves. So, if we do as much as we can ourselves, there is an increased capital cost, but there's a lower operating cost, and the operating cost you have for the entire life of the project. The capital cost you only have once. And so you look at it from a cost balance, right? You look at the cost benefit of increasing capital to decrease operating costs. You run those economic scenarios. But I think it's important to keep that evaluation. Our perspective right now is that the majority of this, if we do it ourselves, is going to be overall the more economic scenario. It's certainly the PEA prices are 2020. The pre-feasibility study that we put out will be up to date 2023 prices. So there will be some accounting for any inflation that has occurred for pricing of equipment in the pre-feasibility study. So that will be up to date. At this point in time, it's too hard to predict because there are things that are going to be much less money to build than we predicted, and some will be a bit more. And so right now we're seeing it just as a wash. We're sort of estimating that it's going to be about the same, but that information gets published publicly in the pre-fees, and then the market can see exactly what that impact would be and what the economics stand out to be.
Okay, and so again, flipping back to the conversation we had at the beginning of the year, there's discussion about potential licensing of the technology, but right now you need to kind of prove it yourself, and then the market that it can be done here. So I'm assuming there's no line item in there for licensing yet.
Not yet, no. And it'd probably not be in the pre-feasibility study because that's going to be a standalone project. But we are looking at it. The way that we view licensing the technology is that obviously us first, because we need to develop a project. And the real value for us is in the molecules of lithium in the aquifer and not the technology. But the technology is obviously key to enabling that value, right? So We have developed now in-house expertise. We're building these systems, these process systems. And when we get to the point where we start building the pilot, the thing that's going to go to the field, we will have in the lab that exact same system operating, because we need to have it for our own testing. And we'll have the staff that understand how to operate it, understand how to do the evaluation of different metrics as it relates to people's brines. So we can start in real earnest, bringing other companies' brines to Alberta, to Calgary, testing them, and then outlining what they look like. And the benefit to having an operating pilot is that you can do the translation. You can say E3 is this to this in the pilot, so we would expect this to this in the pilot. And that enables them to make informed decisions. Do they want to pilot the technology as well, right? Because that's a big decision for a company to invest that capital and that money in a pilot. So they want to be as informed as possible. So that opportunity is coming for us, but we're holding off at the moment. We've only tested a couple other companies, brines, that we have a very strong relationship with. Otherwise, everyone else, we're just saying, when you see our pilot go out, that's the time to come talk to us about doing some testing.
Right. Okay. So they'll have obviously different business model to yours, but okay, that's fine. I want to talk about money. Money's always important on these things, certainly in moments like this. I want to understand, what have you got? What's it going to take you through to? And obviously, maybe if we could sort of lead into some of the money that seems to be swishing around from the US government, IRA, etc. Companies taking advantage of that situation. So, again, how are you playing the capitalization of all these programs?
Yeah, so we've got about $14 million in the bank. We have about $5 million of warrant exercises that are expected, all in the money between, I think the last ones expire Feb 11. So maybe we get some of that in. In terms of grant funding, there's a big opportunity in the States, but in Canada, we'll focus on Canada for a second, where we are, there's also an equally big opportunity for grant funding. So there's grants being provided to our peers through the Strategic Innovation Fund. So Rio Tinto, GM have gotten funds from Strategic Innovation to develop these types of things. They're not all critical minerals, but decarbonizing the supply chain of some fashion, or advancing critical minerals or something like that. So there's capital out there. Those funds that are being awarded right now are not included in the $3.8 billion that the federal government in Canada have outlined to support the critical minerals industry. And so there's probably going to be, and they're still deciding what programs and how to, what the criteria is for those funds at each level. But $1 billion is for infrastructure of that capital. And then there's some allocated specifically for new technologies to advance critical minerals processing and get critical minerals out the door, which we've certainly slot right into. So again, we haven't seen the programs published yet, but that $3.8 billion is there. And then you look at the US. So there's the Defense Act and the IRA, the Inflation Reduction Act. The viewpoint from those from those organizations is that Canada's critical raw materials are domestic North America. And so from that perspective, those funds can flow into Canada. And there may be some strings attached, and we're still in conversation with those groups to understand what the quid pro quo on that would be. And it's probably the lithium might have to go into the United States, which is our biggest potential customer anyway. So that's not really a hamstring, but it may actually, that's sort of the thing that we might be expecting. Again, we're still figuring all this out as the money starts to flow to Canada, because the U.S. just put out $2.8 billion into the U.S. for U.S. companies, but now they're actually actively looking at coming north. So I've never seen it in my entire career where there's this much available capital flowing into the space. I mean, even the OEMs are supporting the critical minerals, the raw material industry, and you're seeing them with big dollars, $300 million from Ford. It's there. The opportunities are there. So for us, I don't think that capitalizing this project is going to be the big concern for us. The stock the stock prices in the critical minerals, as you mentioned, they're misaligned with the prices of lithium today. But there's all sorts of macro factors in the market that can be a cause for that. But I think what that means is that, last time we saw a lithium spike, the market responded, and then the lithium price fell, and the market responded there. This time, the lithium price has not fallen. This time, the fundamentals of the industry are propping up the lithium price, the scarcity of supply. And so as projects like ours advance, as we've talked about, checking the risk boxes so that we can move the project forward towards commercial operations, we expect that we'll be able to fund it, and therefore we will advance the project. And that will gain market value inherently. And it's always cyclical. It goes up and down, but we expect to see that come through.
Yeah. We cycle in, we cycle out. It'll be fine, I'm sure. But I'm sort of amazed at the kind of disconnect between. I was at a dinner in London last night. It's LME week over here, and you're talking to bankers, talking to industry players, and they are gearing up. They are gearing up and ready for this. What they think is going to be, one of the strongest kind of bull markets for battery metals broadly at the moment. Equities don't seem to have got the memo, though. So how do you put your company in the best position? Because I think you started from a point of view people didn't really believe that DLE would work. It's a very technical problem to crack. You have been moving this thing through the phases, but what else? What are the next big things that you need to get in place that you think people are going to pay attention to when we kind of invariably cycle out of this off market that we're in at the moment?
Yeah, I'm hearing the same thing. A lot of people are just sort of like the foot's off the gas for the fall, but in the new year, there's a lot of expectation that these things are going to start to move back. And from our perspective, the next 12 months are pretty substantial for us in what we're doing. And so, you translate that to however you like in terms of the value of the company. But the big thing in my mind that the market is waiting for is us to pilot this technology. And we are not that far away from talking to the market about what that pilot's going to look like, when it's going to operate, how much it's going to cost. And that is fundamental, because that we're not going to do that till we're 100% certain that A, it's going to work, and B, the time frame is achievable. And that's why there's a bit of why it hasn't come out yet, is we're just making sure it's rock solid before we put that type of announcement out, because you don't come back from that type of announcement. And it's imminent. It's coming very soon. And imminent is for us is, the next 3 to 6 months that is out. And considering we've been working on this tech for the past 6 years, a couple of months is such a small time frame for us, because that really what that means is that we've made the full commercial decision that this is the process to make the Sorbent. This is the process to operate it again, the solid liquid separation side of things. We've nailed it down and we're moving forward. And that means we won't change it, right? That will be the design you'll see in the pre-feasibility study. That's what we will piloting. And then that's what the detailed engineering design will encompass when we go to design the actual commercial plant. So it's a big decision, and we're very close to making it, which is incredibly exciting. And I think the market will respond to that, because I think they are waiting for it. They're waiting for us to show the market that we have these things checked off. The other piece of this is that the M&I comes out, hopefully as well, in that same sort of time frame, 3 to 6 months. Those two come together to produce the pre-feasibility study. And there's other little things that are going to be happening, like we're going to be producing lithium hydroxide at battery grade, hopefully in the next 6 months or so. And that's going to be coming out to the market when we have those results. And the hold up from that happening is that we need that decision on the pilot, whatever that is. That machine will then make lots of our concentrate, and we will ship that concentrate to these companies to start doing the development testing required. And that result of that testing is battery grade lithium hydroxide. So another thing that's being held back right now from marching forward is that side of things, because we need to know what the process is, because that process needs to generate the concentrate, this lithium sulfate that we convert into hydroxide. So a lot of things are sitting at the start line right now, ready to go. But once that that gun goes off and we're moving, we're not stopping. We're going right to commercial, right? And just going through the normal steps that companies go through to get there. So it's for me, having worked, founded this company and been working on this for the past 6 years, I'm very excited about the precipice that we're standing on right now in terms of really moving this whole thing forward.
It's interesting. You're sort of moving to the phase where you're almost potentially a technology company rather than in the kind of broader mining category, as it were. So that is exciting. Just in terms of I get what you're going to do, and I think you've given us a bit of a clue what you think the market's going to do in the new year post tax loss season, etc. So your message to current shareholders or people looking into you is what, in the context of, I think people are looking for realities rather than promotions. They're looking for fundamentals. They're looking for groups, assets, teams who are going to deliver. So you just maybe tell us why you think you rather than any of your peers or the next guy down the list.
Yeah, well, I mean, looking at us maybe just in a vacuum, we have always delivered on our promises. So we are not a promotional company. We are really out here to develop a nascent lithium industry in Alberta. And new technology development takes time, but that time is now behind us. So the benefit that shareholders have is that the real things that have moved companies in a real way in terms of their valuation, and you can look at any of our peers, Standard Lithium, Lake Resources, Vulcan, those things, if you just look at their stock chart and look at what are the announcements that they put out that have really moved and catalyzed that stock to create value, and they're all sitting around $1 billion plus minus right now, and we're 150 million. Those things we are about to accomplish. So that's the message really to shareholders, is that we're here doing it. We have a 28-person staff working every day to make this happen for our shareholders. And that success, when we achieve it, should we achieve it, is going to result in our minds in a value increase, relative to what we see on the market, which is our best is our peers, what has created value for them. So I think it's a really good time. We're gonna weather a bit of a storm here over the next couple of months, and we've done really well so far, especially relative to our peers. If you plot the last 6 months between us and those peers I mentioned, you'll see us outperforming all of them. And I think what you're starting to see, therefore, is that valuation gap just starting to close. And I think when we get into this this bull market that you're talking about, that you're hearing about, we're hearing about it as well. People are just waiting right now to see the movement. And then I think you're going to just see the pile on. And it happened in February of 2021. Every single lithium company that was out there doing something, and us as well, had their highest of highs in February of 2021 because the market just came in a fury. And so I think that without trying to predict too much, I think that there is going to be a movement back into these stories. And I think we're one of the better ones out there, fully biased, obviously, because it's my company, but we've worked really hard to get to where we are, and we're about to hit some major success. We're very excited about it.